Do you know that home ownership is now further out of reach than any point in modern history? The truth about the housing market is going to shock you. And you know what the real problem is? It's only going to get worse. I'm going to go over the biggest problem in real estate, how I'm currently taking advantage of it, and how the problem could potentially be solved. So the biggest issue for real estate buyers, investors, and renters, affordability. If you're buying, you're trying to buy affordably because that's where the market is. And the renters, of course, are how much can I afford? And if you're a homeowner, you're also dealing with how much can I afford? Never before in history have we had these high housing prices, high interest rates, and now high operational costs. Operational costs like property taxes, utilities, property insurance, which is now, of course, a huge topic, especially because of these wildfires. Affordability is now at an all-time low. This is going to be your key to real estate investing in the future. So we're going to talk about affordability from a tenant's perspective, from an employee's perspective, because they're either buyers or renters, a builders, a landlords, and investors, and of course from a politicians, because they're all looking at this exact same issue, even though it affects everyone the same. The problem is a lot of these people don't communicate very well. So now we're going to take a look at how each one takes a look at affordability as a process. Once you understand this, you can solve the problem. So from a tenant's perspective, rents are forecasted to rise in 2025 and 26, even with the amount of new construction that's happening right now. So a lot of this construction, there's a lag. It started in 22, 23, 24, and there's a lag here. So there's millions of units being added in condos, multifamily, and single family around the United States. And single family home building is actually doing very well right now, but it's not even coming close to the amount of supply that's needed. So tenants are now going to be facing rent increases in 25, 26, 27. And of course, the only thing that's going to offset that is supply or lack of demand. When people move away from an area, rents go down. When they move to an area, rents go up, just like it did in 2020, 21, 22, and 23. The second big issue are the employees. And of course, I have 300 employees, and this is the wage growth tracker. Over here to the left is the percentage, and you can see that employee wages are not keeping up or even close with inflation or rent growth or home prices or anything like that. So this is actually trending down. This is not good. When wage growth is actually trending down, that means that it's becoming harder for tenants and home buyers and everyone else just to be able to afford to do what they did last year. This is a really important thing for you guys to watch because as you can see, it's been a sharp correction down. When it was at its lowest last was right after the great financial crisis when we had a massive recession. The third thing, of course, are builders. Now there's three main components for the builders. There's the land, there's the construction costs, and of course, there's the interest on the construction loans themselves. Those are largely the three variables of what it costs to actually construct a home. So right now, we are going through a building boom that's going to continue through 2025, but the number of affordable homes is going to set the soar, which is great, but that's because of one thing. They're expecting these homes to be smaller. So the costs aren't going down that much. The homes are being constructed are actually going to start being smaller and smaller. We saw this in the 50s, believe it or not. When the cost of construction goes up, then you get into smarter design and smaller homes, smaller footprints. You see this on the extreme on the rent side with people living in 150, 200, 300 square foot units in like Hong Kong or Seattle or New York. You start to see the rental units and the single family housing actually shrink down for making it affordable for people to live. So this could be an ongoing trend in 26, 27, and 28 to keep things more affordable. For people that are trying to invest, we still have the exact same problem that we've had in the last few years. Higher mortgage rates, which we already know are in the 6 and 7% range. Inflation, it's still here, guys. As you know, the components and all the things that cost to build something, especially if you're doing renovations, and all the risks and the rewards of investing in properties are now a lot harder with the rising operational costs and all the things that it takes to be a landlord and to be able to invest in these. Says it's always the same. It's rent minus expenses minus debt equals cash flow. And that cash flow is then calculated into your down payment. and that generates a cash on cash or some kind of return, an ROI or a return on investment. That's what you're always looking for. And as interest rates stay high and operational costs stay high and mortgage costs stay high, it becomes much harder for real estate investors to find great deals. The next one are landlords. So that's like me. We have 10,000 apartments, and we're battling right now our operational costs, our cost of labor, our cost of insurance, our cost of utilities, our cost of property taxes. All of those things are battles. We've never had a battle like this before. All of these things are going up. Interest rates are also gone up. Anything that we have that's a floating rate or anything that's maturing, of course, we're dealing with higher mortgage costs as well. Landlords right now are struggling to try to get the returns that they had from the prior years because of a lot of these operational costs that are hitting them all right now due to inflation. And this is also the very beginning. So expect this trend to continue over the next several years. So investment has been down in real estate for the last few years because interest rates have gone up, but the prospect for 2025 is actually good. Now, this study essentially says that the percentage of respondents, which are in the thousands, say that 2025 is going to be a really good year to start looking at real estate. So why would that be, even with these high interest rates? The reason is there's a massive housing shortage, and we're going to see some rent growth as we talked about a little bit earlier. Now, of course, we also have higher operating costs, but we do believe that with the unaffordability for the single family home market, people are going to pour into multifamily as an example. There's also a shortage of the single family market, so there's a projection that single family home prices will continue to go up. So we're going to have this affordability problem, which bodes well for investors in the real estate space. So that's why the sentiment is really good for 2025. I completely agree with this. Only a few people think that it's not going to be good. For example, I bought 2 multifamily deals in the last several months, and we just closed on a deal last Friday called Boulder Creek. We're going to do a whole video on this for you to see. We bought it because the occupancy was low, the rents were flat, the operational costs were high, and we're able to bring our management company in there and fix those things and increase the net operating income. And of course, net operating income is just rents minus expenses. We now have a plan to increase the net operating income, which will increase the value. In addition to that, when the prior owner was struggling with some occupancy and cash flow, they weren't spending any money on the property. So we're going to make a capital investment into the units themselves, which will improve the units and command a higher rent price, which will also grow the net operating income. Those are the 3 strategies we have. We'll increase the occupancy. We're going to lower the expenses with our in-house management company. And we're also going to do a value add strategy inside of the property, which hasn't been done for over 20 years. We're starting to see more and more investments like this. And our strategy is to buy as many of them we can through the next year to be able to create value for our investors. If you're an accredited investor and want to learn more about these opportunities, just click below. Politicians are facing homelessness in America like they've never experienced before. Now, they're going to point the finger at the landlord. They're going to say that rents are too much. And in some cases, they're probably right. But really what they've done is they've created all kinds of problems for the home builders, the multifamily contractors, the developers, all the people that are trying to add real estate supply to be able to offset some of these affordability problems. They make it harder. Talk about that in the next slide. But the result is homelessness and affordability problems. It's all because they tie our hands and make the cost of the housing more expensive for anybody to buy or rent. Homelessness is going to continue to be a problem until the politicians understand they need to make it easier to be able to develop housing to accommodate the growing population. So for 2025, I see these 4 issues. I see 1, rents are going to grow faster than wage growth. And that's going to piss everybody off, just like it has in the past, because renters are going to feel like they're falling behind. That's because they are. Home buyers have lost purchasing power because the rates that they have currently might be in the 3, 4, even 5%. And the rates today are in the 6 and 7%. So they're going to stay put and there's going to be all this trapped equity. The cost to build will slow supply. So what this means is, we talked about this earlier, you're going to start to see smaller homes and smaller apartments because that's the only way to make it affordable. Costs are continuing to go up in every way. And as long as interest rates remain high for new construction, all that does is make it even more difficult. And the last thing are the higher interest rates. Now, no one knows what 2025 is going to be like. No one knows what 2025 interest rates are going to do. However, they're still sitting in the 6-7% range, which is significantly higher than the 3 and 4 and 5% range that we just got through. When we're lower, it spurs new construction, new development, new supply, and that's precisely what's needed. So who this affects the most are people that don't own houses right now. That first step, that first affordable home, is the most important thing in a person's life, is to be able to step into that home and be able to pay it off instead of paying rent. And that is just the first step on the ladder. And these other things now just keep them on the low rung of the ladder. They're not going to be able to jump into home ownership like so many people did in the generations before. So now I'm going to talk about the solutions. So the lesson number one, of course, is if a state, city, or county control your income and expenses, move on. So what does that mean? What that means is, if you're an investor, where rent control is and where it might go. So these are the states. The darker ones have really strict rent control. The ones that are white are the ones that are unlikely to have rent control. Now, the only reason we're talking about this, because if you are an investor, then you're now restricted on the income side of the equation. At the same time, you're getting pressure on the expense side in the form of property taxes and insurance, potentially state insurance mandates, those kinds of things. You're going to start to see that. So you're going to have rising costs with restrictions on your income. So as you continue to invest, you should probably pay attention to the states that are not so dark here in this category, because you're going to have extra layers of restriction on those. Lesson number two, people drive all real estate. What that means is you want to invest where people are going. So in 2024 to 2025, where are they going? Where are they moving in? Where are they moving out? These are the most recent numbers from the U.S. Census. You can see the top states. And these had the vast net influx. Those are people moving in versus people moving out. Texas, North Carolina, South Carolina, Florida, Tennessee, Arizona, Alabama. It should be no surprise to you that you're also seeing rent growth and home price growth in a lot of those markets. And it's even better if you can drill into where in Texas. Are they going to Houston? Are they going to Austin? Are they going to Dallas? That information is available. And I would encourage you, if you're going to look at investing, you want to get into that level of detail. People are really frustrated with the cost of living, especially with all this inflation we just had. In the middle here are the most expensive U.S. states. It should be no surprise to you that they continue to be the most expensive states. And this is where everything's projected to go for 2025. Florida, Texas, North Carolina, Colorado, and Georgia are also on here, which is interesting. That's precisely because of affordability. What I want you to really focus on is number 5 here. The unaffordable cost of living is the number one reason why Americans are moving. This, I cannot emphasize this enough. We already talked about wage growth. It's flat or barely growing. And now you've got inflation just crushing people. They start to look at what is probably their largest expense, housing. And they're going to start to take a look at, how can I just live the way that I lived last year? Unaffordability, which is the point of this video, is going to be the trend you're going to continue to see through the next several years. Lesson number 3, solve the problem. Everyone's jumping on this bandwagon. This is the National Association of Home Builder is lobbying the new administration, the old administration, and what we need is supply. We already know that we're in the millions short. We know this. If you just go back and look at the last 20 years, you can see this. Now, one good thing is population growth is actually slowing down a lot, but we're still millions of units behind. And so the regulators need to take a look at things like zoning, impact fees, which is literally just what does it cost to plug into the water, sewer, trash, density, how many units can you build on 1 acre? The private-public partnerships Trump is talking about, releasing more state land to be able to build on. That would be one example of the private-public partnerships. Land costs, who knows where that'll go, but as they go up or down, it affects affordability. Low-cost construction, low-cost dollars in the form of interest rates. Subsidies, sometimes the government, state, local can give subsidies. Sometimes you get it for building affordably. Developer incentives, owner and renter incentives, and policies for growth. These are all things that can help add supply. Like anything, when there's a lot of supply of something, the price will go down, period. So what's needed here to give relief to homeowners and to renters is more supply. So as you can see, even with the increase in permits and things that we have just recently, we're still severely undersupplied. But I really like this article here, is out of 109 cities, 74 of them experience population growth. And of course, as the last sentence says, as more people move into a city, demand for housing increases, leading to higher home prices. It should not be a surprise, guys, that when you drop a whole bunch of people into an area, then things are going to be less affordable. That's all this is talking about. So pay attention to population growth, migration, interest rate, construction, all of that stuff in one big pie as you're looking to invest in 2025 and 26. Many of you know the real estate debt reset has begun. Interest rates are up, property values are down, and lenders are panicking. This next video will reveal why 2025 will be a turning point and how you can find the best deals in this chaos.